financial consolidation and how to avoid them. A panel discussion brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce our expert panelists and our partner sponsor, let me share some brief housekeeping items. We'll have a Q&A at the end of the presentation, so please use your GoToWebinar control panel to ask our experts questions. Next, this webinar is not CPE eligible. And finally, you will receive a link to this webcast via email in the next 24 hours, so no needs for notes or screenshots. So with that, I'd like to say a word about our partner and sponsor, Fluence Technology. Puts control in the hands of finance and accounting teams so that they can close faster, report with confidence, and do more with less. Fluence's financial close, consolidation, and report management platform delivers a pure cloud, out-of-the-box solution for modern, high-growth companies. For more information, visit fluencetech.com. So with that, I'm very pleased to introduce our expert panelists and our moderator, Marissa Ruffles, Chief Marketing Officer of Fluence Technologies, Guy Menard, a CPA and VP of Operations at Fluence Technologies, Andres Ibanez is CFO of PBS Solutions, and James Glau is Solutions Principal of Fluence Technologies. Welcome, panelists, and Marissa, take it away. And go on video.
Hello, everyone. Welcome to our session today. For financial consolidation and how to avoid them. I am honored to be joined today with three experts in the space you see on your screen today: Guy Menard, Andreas Ibanez, and James Glau. So we'll start off this event with a fireside chat with Guy and Andreas, and then we'll move into a demonstration with James. So let's kick things off with some intros. Andreas, tell us a little bit about yourself and your background and the company PBS.
Sure. I'm the CFO for PBS, and I've been in this role for 13 years. PBS is a leader in the technology delivery solutions. We are the leader in Central America and the Caribbean. Our revenues are about $350 million per year. We are a public company. We're listed in Jamaica and in Barbados. And in terms of the complexity of PBS, we have about 41 entities, of which 6 are holdcos. We operate in 14 different currencies. PBS has been growing significantly in the last 3 years. We've made each year we made an acquisition. The acquisition size is 2 to 5 entities per acquisition. So we're definitely on a growth spurt, and that's pretty much PBS for myself.
Great, thanks, Andreas. Guy, you're the VP of Operations at Fluence, but tell us a little bit more about your background and your history within the CPM space.
Thank you, Marissa. Yes, my name is Guy Menard, based out of Montreal, Quebec, Canada. As Neil was saying, I'm a CPA. Most of my career has been spent in the CPM space, planning, forecasting, and consolidation. I've spent about 15 years doing implementations for customers like the ones that are participating in this webinar. And the last 15 years of my career have been spent in product management. So essentially taking all that knowledge, all that feedback from customers and partners, and really baking that into to the product. And I'm one of the original founders here at Fluence since the beginning. And I look forward to chatting with Andreas today.
Great, thanks, Guy. And last but absolutely not least, James, you have a long history in the space as well. Tell us a little bit about yourself and your experience.
Yeah, nice to meet you all. Yeah, I've been in the close to record space and report space, I should say, for at least a dozen years. And frankly, I find myself continuing to move up the chain, so to speak. It all started in reporting, and the difficulties and troubles that folks had hitting deadlines and having accurate results, and started poking the bear. Went up more, up process, if you will. Oh, consolidation's taking forever. It's off. We're waiting on X, Y, or Z APAR functions, etc. Oh, well, where's the problem? Well, it's upstream from that. It's account recs, a month-end close checklist. And as I continued up that stream, I said, there's got to be a better way, folks. So that's really why I landed where I land. I love taking issues that our clients and prospects have, mapping them to the solution, and showing them how life can be so much better and so much more meaningful for not only the folks at the top of the reporting process, the VPs, the C-levels, hey, the shareholders, what's really going on and can I trust those numbers, all the way through to the folks that are on the ground doing the work, making sure that it's easy for them and that they can spend their time really building stories around numbers instead of ticking and tying. So that's my passion, and that's what I'm here to do.
Awesome. Thanks, James. All right, let's dive in. And Neil, I would just ask if you can stop sharing the slides, that'd be great. And we'll just have our three on the screen. So let's jump in. Be no surprise to the finance folks on the line, I'm sure, but Excel is a key application across the office of finance. There is a massive base of people that know how to use the application, thrive in formulas and cells, and really just feel most comfortable working in that environment. And we see challenges start to build up as companies grow, both organically and inorganically, frankly, which means more business entities, more KPIs to track, more users and stakeholders, and things tend to get out of control at some point. Guy, with your experience in this space, really having seen hundreds and hundreds of companies using Excel and making transitions, what are some of the limitations that you've seen companies experience as they grow and scale?
Well, hopefully these will not come as any surprise to anyone on this call. But some of the main ones are definitely the file getting perhaps a little too big to manage. Maybe it's a little too slow. Maybe it's too big. You're hitting certain limitations in terms of rows and columns, which forces you then to create multiple workbooks and creating disparate files. So that's certainly one of the major limitations. Another one, especially if you're rolling this out to multiple users, perhaps across like many different countries, is that there's no real security. If you have access to the workbook, then you have access to all the information. So security is often mentioned as a key concern with using Excel. Oftentimes, people would like to have a little bit more visibility into the close process. And this is where workflow would be really nice to have. And Excel, as we all know, doesn't have any workflow capabilities. So for someone like Andres, the CFO, there's no real way to know where am I in the close process? Am I on target? Am I falling behind? What corrective actions can I take? That's one. Another one, obviously, data integrity. The risk of data issues, the risk of potentially having the wrong formula, the risk of perhaps maybe keying over a formula, the risk of maybe just not updating the formulas correctly when you're modifying the workbook to add new accounts, or maybe when you have a new acquisition and you're adding more columns. Just maintaining formulas could be huge data integrity risk. And probably the last one is too much manual effort. Just too much manual effort actually compiling the information, inputting the information, validating that you don't have any errors, and then you get to the end and there's no time for what's really important, like James was saying, right? Like looking at the numbers, analyzing, making better decisions. Those are some of the highlights. But I mean, Andres, maybe you want to chime in and
sure.
And maybe add to some of the things that you've experienced.
Yeah, I mean, we are basically the poster child of what can happen when you stick with Excel. We had our come to Jesus moment 2 years ago when and just to give you a little bit of background. So like I said, we are a listed company, and as a result, we are audited by PwC. The complexity is extremely complex how we operate. We actually have 18 different component auditors throughout our territories, and how it works basically is PwC uses what they call reporting packages, and really what that is basically it's your primary financial statements and all the disclosure notes associated with that. And what really happens basically, it's one gigantic Excel spreadsheet with, I believe it's 61 sheets that link and tie to each other. And we were in the process of closing our 2020 audit year. And PwC at that point basically realized that one of the disclosure notes required a change. And that change basically was a simple adding 2 lines to one of the disclosure notes, but it literally brought my department to a standstill because we had, you have the 41 entities, then you have 61 worksheets, and you have to go into each spreadsheet, make sure it ties, and they have interlinking, because they are basically disclosure sheets, they interlink with each other. It literally took my group basically 2 weeks to fix the spreadsheets to include those 2 new line items and disclosures. So that's when I realized that we had to leave Excel. I mean, it was not the platform that we could use, given the growth that we had. And the second thing that you mentioned, Guy, is I think is also very important. Excel and systems we were using were very limited into the depth of information that we could extract from a internal ledger. We really didn't have any dimensionality in our data. It was really, two dimensions of anything. And with the growth of our company and with the acquisitions, with the different adding of the different product lines that we had, it was you would have basically your financial reporting, your internal management reporting. The numbers wouldn't cross, they wouldn't tie. So that's when we decided we needed to find a solution that would allow us to do our internal management solutions, internal management reporting, as well as our external management. So those are the 2 kind of key pain points that we had that really made us realize that we needed to abandon Excel and look for a third party.
Yeah, that makes a